Okay, so now we look into the specific financial statements. So the first statement is the statement of financial position, or in other words is the balance sheet. Okay, the MFRS 101 has specified the minimum line items that should be shown inside the balance sheet. Secondly, the assets and liabilities should be classified according to current or non-current. Okay, so assets, there should be current assets and non-current assets. There should also be current liabilities and non-current liabilities. And however, if the order of liquidity is more reliable and relevant, therefore companies may choose not to classify the assets and liabilities according to current or non-current. Okay, what they do is that they show the assets according to the liquidity. They would normally show the assets that are most liquid, such as cash, at the top, and they will show the assets that are least liquid, such as property, land, equipment, at a lower place. Similarly, for liabilities, they will show the more liquid liabilities on top and show the less liquid liabilities at the bottom. But and they should only do this if it is more reliable and relevant. Otherwise, they should show assets and liabilities in terms of whether they are current or non-current. Organizations should also show or disclose additional information either in the body of statement or in the notes. Okay, in MFRS 101 in paragraph 79 stated the types of additional information that should be shown in the body of the statement, which is the statement of financial position, or they should put the additional information in the notes to the accounts. We will see examples of this later. So this is an example of a financial position, statement of financial position of one company. This is Iris Corporation Berhad 2012 annual report. As you can see, in this statement, it shows the comparative information. Okay, the statement shows the 2012 financial statement, okay, as compared to 2010. Okay, this is the comparative information that they are showing. And then in this financial statement, statement of financial position, it shows the liabilities and assets according to the non-current or current of the assets. Okay, so assets, they have the non-current assets category, and they have the current assets categories. And then under the current assets, they will have the minimum line items as stated in MFRS 101, such as the inventory, trade receivables, tax refundable, cash and bank balances. These are the examples of items that has been spelled out in MFRS 101 that should be shown in the statement of financial positions of a company. There are details in the notes. If you see, one of the column is note. So intellectual properties, it shows note 10. There's a note, there's a detailed explanation on intellectual properties under the notes to the accounts number 10. So this is the notes to the accounts. Under these notes to the accounts, it shows detail about intellectual properties. It shows the cost of the intellectual property, if there is any acquisition. So here it shows that the group has acquired additional intellectual property in the period up to 31st March 2012. Okay. Notes to the accounts also show the accumulated amortization and acquisition through internal restructuring. So there's more detail here that is not shown in the statement of financial position. In the statement of financial position, it just shows the aggregated amount, but in the notes to the accounts, it shows the details. How are the amounts arrived at? This is the remaining part of the financial statement of financial position of Iris Corporation. So we can see the equity section as well as the liability, and you can see that in the liability there's the current liabilities as well as the non-current liabilities. This is an example of another company's financial statement of financial position. This is of CIMB Holdings Berhad, okay, another big bank in Malaysia. So in this statement, it shows or presents the assets and liabilities based on the liquidity of the asset or liability, and they are not shown in terms of current or non-current components. So if you see the assets, there's only one big category of assets. There's only one category of asset, but then under assets, the items are shown in terms of their liquidity. The top one is cash and short-term funds. These are the most liquid assets, and then the bottom one is investment properties. These are the assets with the least liquidity. And if you see the liabilities, those which are the most liquid is the derivative financial instruments, and those that are less liquid are at the bottom, such as the subordinated notes. Next, we look at statement of comprehensive income. When companies want to prepare the statement of comprehensive income, they may show or they may prepare one statement or two statements of income. Okay, if they choose to prepare one statement only, they will show the statement of comprehensive income with all the information. If they choose the two statements option, they would have firstly the income statement, and secondly a statement of comprehensive income. So they will have two statements. So companies may choose to have one statement or two statements. Of course, if they choose the one statement, that one statement should include all the information from the two statements. If they choose the two statements, there are some minimum line items which are spelled out by MFRS 101 in paragraph 82. So those minimum line items as spelled out in paragraph 82 must be shown in the statement of comprehensive income, as well as those items that are required by other MFRSs. Expenses may be classified by nature and can also be classified by function. If they are classified by nature, the names of the expenses will be according to the type of expense. Okay, so for example, the depreciation expense, transportation expense, or advertising expense. But if expenses are classified by function, the way the name of the items will be based on the department or the function of the expense, such as administrative expense or marketing expense. This is an example of a statement of comprehensive income by the same company we've seen before, which is Iris Corporation Berhad. This is the one statement format where the company produces a statement of comprehensive income that has all the items within the income statement. Here the expenses are classified based on function. For example, administrative expense, finance cost, and operating expense. So these expenses are classified according to the function or to the department of the organization. This is another example. This is the income statement, or the statement of comprehensive income of AT Systemization Berhad. It is a one statement format, and for the expenses, they are classified based on the nature of the expenses. For example, amortization and depreciation expense, employee benefit expense, and other expenses. Another example is Encom Logistics Berhad. And Encom Logistics Berhad uses the two statement format. So the first part is the income statement. So in the income statement, it shows the revenue and the cost of sales until the profit. And because it's a two statement format, they also have another statement which is called Statement of Comprehensive Income. So here it shows other comprehensive income, the revaluation of leasehold land, deferred tax on valuation, and so on and so forth, until how the income is attributed to the owners of the parent and non-controlling interest.